This goes back. Oh. Good times. Good times of love, baby. And violence. Oh. Oh. How you guys doing? I hope you're doing fine. I hope you're doing wonderful. Before I start, please, I would like you to like, share, and subscribe. Please, please, please. I'm being nice and I'm begging. Please, if I really can block people that come in without listening to my videos, without saying doing likes, I would really do it. I'm gonna start blocking in Twitter. I'm getting tired of free riders. I really am. I just want appreciation, guys. I want nothing. I don't want money from you. I don't want anything from you. I will never, ever do the subscription fee. Nothing. I don't need you. I have money. I just need the appreciation, please. Like. How you guys doing? I hope you're doing fine. Now I'm going to start with my bias, the dollar. And today we hit the 150 Fibonacci extension. From this low to this high to this low, which could be, it's a valid target for a minute 3. Maybe not, but it's a valid target. We could go all the way to this one, or maybe more. The minute 3 is not stopping. Even if we retrace here, it's not the end of the move. So again, this is Fibonacci extension. We hit the first one. See how amazing it is? We hit that one exactly. We retraced a little bit. Now we hitting 150. Okay, so good. So let me discuss the daily time frame in the stock charts for the USD, even though it's not updated. That's why I started with my trading view. Okay. All right, so we did the 5 waves down, big ones. I think the bear market ended here, and we did ABC, 3, extended 5. We called the extended flat C, and 1, 2, 3, 4, 5. 1 became 1, and 2, as I discussed. And if you look at my videos, I was very certain. And I think the worst is behind us when it comes to messing the Elliott wave count with the government intervention. Now, hopefully, I'm hoping to God that this intervention would ease so we could make money, we could focus. Okay, so I did 1, 2, and I think now it's a possibility that we concluded the minute 3 here, but I'm not going to be amazed if we go all the way to 2, maybe 260, 262. But usually 162 is the best target usually, historically, but I don't know about the future. So going back, see this one, updated. Okay, so it closed here at 92.21. So here's not updated, so this is 92.21 right here. So supposedly this one is the settlement price today. Okay, good. So we go back to 1, 2, 3 reversal. This is good deal. So let's talk about the weekly time frame and what I think is going on. This is an updated one too, so you can see it like nice, beautiful stochastic high reading, which shows strength. Look, it's hooking up. Ooh, this is really beautiful. This is indicative of wave 3 all the time. This impulsive wave, it's always wave 3. See, this is 1, 2, 3. Okay, 4, 5. It's always impulsive like that. This is A. It was not there. It was corrective anyway, A, B, C. But if it was 1, it was not very impulsive. See how it is? So this is different. This is different. And if you look at my previous videos, I was very certain. I was lucky. But I play by the book, as I stated in the videos. Just play by the book. Okay, so this is the third wave. I want to discuss the weekly time frame. Let's do it here in TradingView. Okay, let's see if I have. Okay, this is the weekly time frame. So as I talked about the impulsive wave, let me get rid of this one. Okay, so look how impulsive it is. This is very corrective. This is very impulsive. So what's different now? It's the first time when we have three. I call them the disco combo. We have uh, bullish MACD, which I always talk about. This is the weekly time frame. Bullish MACD in the time and the weekly time frame is amazing. So you come out of the oversold in stochastic at the same time, and the RSI over 50. This, to me, it's okay to have a position trading in USD now. If you have a lot of money and you don't want to sell too soon, it's okay to do it because of these larger time frames, the weekly. Okay, so why is this one different than this one? This one, the RSI was not over 50. Okay, why this one was not? It did not result in good things. Bearish MACD at that time. RSI is below 50. This one is. It's the perfect alignment. You could see it here. You could see many impulsive moves in the USD. So I discussed the Elliott wave, the daily time frame, and the possible targets. Let me go back, and we're supposedly gonna start the large three when we take this bad boy. Okay, so we are in the minute third. So my assumption still we're gonna take this one in 3 weeks, maybe tops, by July. This one right here, and we're gonna start a very violent move to the upside. Okay, maybe very soon, I don't know, but all I'm saying, any retracement here is to be bought. Okay, even minute fourth wave should be very brief and very small. So okay, good deal. So we discussed the Elliott wave in the daily time frame. We discussed the weekly time frame and the significance of the disco combo, which is a bullish MACD in the weekly time frame, bullish stochastic, and RSI over 50. Seeing is believing. So okay, let's talk about another thing I like, the market. I'm talking about the market now because it's going to be in my favor because I'm longing the USD. So as I tweeted to the two people that are following me in Twitter, I'm gonna start blocking a lot of inactive accounts in Twitter by next week. If you're too good, too snobby, to comment, I don't need you. I'm doing things for free, and all I need is appreciation. And if you don't appreciate me, I'm gonna block you in Twitter. I wish I can block people here on YouTube, but I can't. Anyway, so I'm doing the market here because of it's gonna affect the dollar. So I'm thinking the safe haven is going to be the DXY. So any sell off in the market's gonna be in a favor of the DXY. Okay. So what happened different today? This is the daily time frame in the Dow Industrial. So bearish bearish crossover between the 10 and 20-day moving average, ABC down. Now we're gonna start the Fibonacci extension, as I taught the two people that are watching me. Okay, ABC and Fibonacci extension. We don't know when it's gonna stop. So this is the first reliable crossover since November 2020. The MACD now is below zero for the first time since the correction right here in September 2020. Say this was classified as a correction. So my assumption is we're gonna have a correction at least like that one, which was really severe at that time. Good deal. So MACD is below zero for the first time since that correction. And also we have the lowest RSI reading since the flush, even below the correction. Is it significant? Absolutely, all the way, 100%. Just take everything seriously all the time. Take everything seriously. So this is significant. This is significant. This minute small breakdown is significant. Okay, good deal. So what other things? Usually, once you do overbought, then you give another go with with RSI again. It results in correction even in the past. Okay, we have this here and another one, and with that one we have bearish divergence with the RSI, which is extremely reliable. So again, let's do it over. The first reliable crossover, bearish crossover between the 10 and 20, ABC down, Fibonacci extension. The first time you have MACD below zero, and RSI lowest reading after bearish divergence, high overbought RSI back to back, then boom, and again it happened in the past. You could check it out. Let's look at the weekly time frame for the Dow Industrial. So this is the first time you have an extremely reliable, a really clear bearish crossover in the MACD. See, this is not clear, nor that one. In the weekly time frame, since when? Since the flush. Would I take it seriously? Oh, the way. Why not? Why not? Why do I have to wait for people in CNBC to tell me what to do? Okay, just play by the charts, do it, boom. Okay, so what happened? Bearish divergence, even in the weekly time frame, in both stochastic and RSI. Is it significant? Oh yeah. Why not? It happened in the past. Just let the history show you what happened. Overbought, boom. Overbought, boom. And the RSI. That's you could even look at you could go back and look. So would I listen to people in CNBC? Absolutely not. Okay. So what happened here? Again, first reliable bearish crossover in a weekly time frame that came with negative divergence in stochastic, RSI. The first two dips after. So you go RSI overbought, then you go again, and boom. Okay, you go again and boom. And what happened here? Same thing. So can it happen again? Why not? Why not? Why do I have to wait for these people to tell me what to do? I could look at the chart. So the chart tells me to hit the road jack. Okay? So am I making this up? Absolutely not. If you don't believe me, do whatever you want. Good deal. So I talked about my thesis in the Dow Industrial. I didn't even discuss the Elliott wave in the Dow because I gave up. I gave up on trying to count and government's interventions and portfolio managers go bananas. So I'm doing conventional technical analysis purely in the Dow. Okay, so look at the VIX. I tweeted that and also put that in LinkedIn. I really wish I can even block people in LinkedIn, the passive ones. I really don't like the passive ones, the free riders. The people don't have it. They don't appreciate people that do work and do it for free. And it's okay. And you can see my frustration now, how I do things like this and no one appreciates it in the social media. Good deal. So what did I discover here? I discovered when you have a low in the price action in the VIX, lower low, then you have a positive divergence. You have a positive crossover, bullish crossover in the MACD. Good things happen 100% of the times in the past. 100%. It's always very noticeable move. Sometimes 50, sometimes 100% of the price action. Okay, good. So you can see it here, you can see it here, and you can see it here. And believe it or not, it happened now, because I tweeted that when it was almost 16. Now it's 20. So we talk about what? almost 20%. Wow, that's no more than 20. Don't embarrass me, man. Come on. Let me try to do it now. Okay. Yeah, almost 21%. This is a major move, but I'm expecting more. Okay, so positive divergence, this one. So what's going for the DXY? Market retracement or correction caused by the VIX and bearish actions in the dollar. Okay, and bullish Elliott wave count in the DXY in the daily time frame and weekly time frame. Bullish actions in the DXY in the weekly time frame. So please, again, please do like, share, subscribe, and please make me feel better. I'm doing this for free. I really am. I'm doing things for free. Just appreciate that and push like. That's all I want from you. And do remember that I'm disco and I'm trying to disco. I'm trying to have a good time. Make me have a good time. And disco with me, will yous? And just enjoy disco, huh?